Hello guys, so this is Peter, your lead instructor for Peter's Hub Academy. So this video is to guide you on understanding basic demand and supply. Demand and supply is that market tends to move from one area of demand. Market moves, sorry, market moves from demand to supply and vice versa. Okay, so this is the first thing that you must first know, that market moves from demand to supply, from supply to demand. So there are some incomplete moves that markets make sometimes, but trust me, you will be able to understand that that incomplete move also is a demand or supply. Let's say a person is buying from a particular point. Let's say this point is like 10 naira is the price of something. You bought it at a particular price. Let's say it got to the rate of 15 naira and then you sold. The moment you sold, there are some people that were wanting to buy when you bought it at that 10 naira because it's a cheap price to them. So they will be patiently waiting for it to get to that point, waiting for you to sell to the price they bought and that you bought it. So patiently they will be waiting and instantly they will buy. That's how market is moving. Sometimes the order of the buy might break the one of the sell. Thereby, that's what now a lot of people call as break of structure, because it broke this previous area, which was the initial highest point that the market got to. Don't worry, I know it must look as if I'm fast. Alright. Let's play around with some terms. Okay. Let's say you have 3 friends. You left your 3 friends at home, you went to the market because you heard that a bag of rice is now sold for 10,000 naira and you had 50,000 naira in your account. Okay. So you heard that the price of a particular rice is now sold for 10,000 naira. Sold for 10,000 naira. And then you bought 50 bags, or let's say you bought 5 bags. So that is 50,000 naira, which is equals to 50,000. Alright. So now you have some friends, but eventually your friends now, when they heard that you bought rice in that cheap price, they will now fighting you that why wouldn't you tell them that rice is now cheap? You just went there to go and buy. So the moment before they will get to the market, the rice has become so expensive that they could not buy again. Then I say, okay, we'll be patiently waiting for the price of the rice to get to go back to that 10,000. When it is at 10,000, we are going to buy more. So that moment that there is 10,000 there, when the price of the rice goes back to 10,000, they will be patiently waiting for the rice to get to that price so that they can buy. At that moment, they also would have told some other people, and then there will be a lot of people waiting patiently for the price to come back to that initial price that you bought your own for bags. Now they will be having like more than enough money. Some will even have to go and borrow money from people just so that they can be able to buy a lot of rice, because they know that rice is so expensive. So seeing it at the price of 10,000 is a very good opportunity to buy. So they were patiently waiting. All of a sudden, when the price now got back to 10,000, there will be enough orders patiently waiting for the price at that area of 10,000 naira. So they will now be able to say that the price now come back to 10,000 naira. There will now be more than enough money to buy maybe like 100 bags. So which is equal to, let's see, that will be 1 million naira. Yes, yeah, that will be 1 million naira. That will be 1 million. So you see that the price, now looking at this analogy I drew, okay, let me say this. All right, so you should be able to hear me now. So when the price of the rice was around this area, we say this is the 10,000 naira area. We say this was the area the price was. Let me not even use this tool. Let me use maybe like a rectangle instead. Let's say this was the price, the area that the price got to. Let me mark it with blue. Let's say this was the area the price got to before the price. This was the 10,000 naira area. You bought it, all of a sudden the price got to, let's say, like 50,000 naira per bag, which is this area here. So this line here represents the 50,000 naira area. So you bought from 10,000, the price got to like 50,000. All of a sudden, when you saw that you have made times 5 of what you bought, so that means you spent 50,000 naira to buy 5 bags. Eventually now the price of one bag is now 50,000, so your total money will now be 250,000. So that means you have made times 5 of the amount you spent. So instantly you will sell, because you now heard, maybe you now saw that the price of rice is coming back down. Instantly you will sell so that you will secure the profit you have made. By saying that you have secured the profit you have made, eventually be patiently waiting. You will now be waiting for the price to come back to the small price, the 10,000 it was before, so that you will not buy again. By that time, you will not be the only one buying. Now you will have your 3 friends, your friends buying with you, and those friends, they are prepared money that is enough to buy 100 bags, because why? They know that seeing it at the price of 10,000 is an opportunity. So eventually they will buy. So the numbers of the amount of buying orders around this point is so powerful that the moment it began to take the price up, so there was a lot of people that bought at this point, so it was able to now break the previous 50,000 naira threshold. This was the highest point the market ever got, which is 50,000 naira. But all of a sudden, because of the numbers of orders that bought from here, all of a sudden it pushed the market upwards, because there is a lot of buying pressure here. That is what we call demand zone. Because why? Demand zone is the area where there is a lot of buying orders patiently waiting. Demand zone is the area in the market where there is a lot of buying pressure, where buying happened. So there are weak demand zone and there are strong demand zones. So this is a weak demand zone because it was able to break the previous highest point that the market ever got to. So this is a strong demand zone, because why? It was able to break the highest point that the market ever got to. So same thing. When the market eventually comes back again to this 10,000 naira area, there will still be enough orders around here again. People will still want to buy because they see this is a good price. There will still a lot of order that will still break this previous strong area. So now this place will now become our new strong demand area. The place the market started from again will now become our new strong demand area. That's what demand zone means. The same thing vice versa supply. Supply zone is the area whereby there is a lot of selling pressure, a lot of selling orders patiently waiting. A lot of selling orders patiently waiting. Let's say somebody has, let's say you have 50 bags of fire and you heard that the price will be coming down. Instantly after hearing that, you quickly sold yours. You are able to secure money. Let's say you sold it and then you were able to secure money. But some people that were not there, that did not hear when they said that the price was going to come down, they were not able to sell their own. So they'll be waiting for the price to come back to that highest price, which it was before. Then they will now sell their own too. So you see that is what moves the market. That is what moves the market. So please, I want you to see that in your mind, okay? I have 5 more minutes to explain what I'm saying. Now, market always creates a kind of range like this, create a lot of incomplete movement, create a lot of movement, create a lot of small movement like this. All of a sudden you see that the market comes back down. So if you want to now be able to know the area to buy for, this is demand, this is a supply zone now. You will mark all this entire area. Mark it like this, draw it to your rightward direction. I'm telling you how to draw it, how to mark a supply zone. Okay, let me use red. How to mark a supply zone. So eventually you'll be waiting patiently for the market to come back to this area. When it comes back to this area, you will sell. So, and one of the ways to mark a supply, the same thing in demand area. Let me explain demand area too. Vice versa. Market comes like this, create a lot of systematic moves like this, maybe it's making moves like that, all of a sudden it now went up. You will mark this area. This area that we mark, where there was a lot of small movement like this, is the range structure. Range is the range structure. Range structure. So eventually price will always return to that place, because why? After the market formed the range, there was now a strong pressure that took it out, that book. So eventually we're waiting for price to come back to that place, and then you will buy. If this is the only thing you are looking at in a trade, you'll be able to still be profitable in as far as your conditions are met. So now, how do we mark demand zone? Let me show you an example of what I'm saying on the chart. I want you to see clearly so that it will not be as if we are saying some things that are not possible. Alright. Please, I want you to follow me closely, okay? I want you to follow me very, very closely. I want you to see this point here now. Look at it. The market formed a lot of range here. What happened when the market formed a lot of range here? You can see that there was a strong selling pressure that went down. So you'd be patiently waiting for the market to go back to that area. That is what I've been explaining since. You just extend your range structure that you mark. You extend it like this. Then you will set your sell order. You want to set your sell order from the beginning of that range to the ending. Just leave a few pips and then target the previous low. This previous low here, let it be your target. My student will always ask me, how do we know that the market will buy? How do we know that the market is sell? This is one way to know. I told you that the market always tends to repeat itself. So once you have seen that a range happened around this point here, and after the range something happened, the market went down, you patiently waiting for the market to retrace to that point. And then if you are doing this, at least if you take 10 trades, you should be able to win like 7 of them. I took 10 trades, I won 7. Is that not a good trade? That's a good trade. It happens almost every time. This is one way to know demand zone. And this is, look at something like this again today. There's still other ways you can be able to mark it. Look at something like this too again. It happened somewhere here too. The market formed again. All of a sudden there was a movement to the upward direction. So you patiently waiting for the market to come back here. When the market came back to this demand zone, what happened? There was a movement to the upward direction. That's exactly what happens in the market. So go to your chart, check all these things that we're doing. If you don't understand some things, you can ask a question in the comment section or text me on WhatsApp. So these are a lot of things that you need to understand in the market. Okay, now the last thing I'm going to be explaining is how do we mark a good demand zone. Demand zone is the last candle before there was a change in momentum. Before there was a change of direction. Okay, sometimes I mark the last candle. First, you must first identify the trend. Let me write out some things. Steps to note before marking a valid demand and supply zone. These are the steps. Okay, now pay attention. The first is that, let's say one, you must first note the market direction. Then secondly, after noting if now mark the opening and the close of the last candle before the change of direction. Before the change of direction. Okay, then the last part, I'm going to leave that exclusively for my advanced class students. Let me first use this for you guys. Let's say, look at this area here. This is a candlestick. Let me show you. This is what we call a candlestick. and then you see something like a wick like this. Okay, if you see something like this, a candlestick. So this part here, I'm coming. If let's say this candlestick, let's say it's a bearish candlestick, meaning that it's a candlestick, it's a candlestick indicating a sell direction. So whichever color you are using to me, I'm using black as my bearish candlestick, I'm using blue as my bullish candlestick. So let's now say you are using red as your bearish candlestick. This is the eye. It happens in it is the same thing. This is the eye of the candlestick. Why this place that the wick stop is the low. Okay, so this is the body of the candlestick, and then this is the, since the market is a candlestick coming to the downward direction, so that means the market open. This is the open here, the body in the open, and this place is the close. This is the high, this is the low, this is the open, this is the close. Okay, please, I don't want you to forget what I just explained now. So in a bearish candlestick, the open is always above, while the close is always below, because the market is coming down. So but the high and the low is always the same thing, even in the bullish candlestick, the same thing. So but in a bullish candlestick, the open is below. In a bullish candlestick, let's say this is a bullish candlestick. Let me use blue color. So the open is below while the close is above, because why? The market is going to the upward direction. So that means it's starting from the down going to the up. So the open is there and the close is there. So if I'm saying that in a demand zone, if you want to mark a demand zone, mark the open and the close of the, or use the high and the low, whichever. I used to mark the high and the low of the candlestick. Let's say I want to mark this candle, I'll mark the high and the low and then extend it. You can see that when the market reversed to that area, the market went up. Okay, you can see that the moment the market got to that point, the market went up. So let's stop this thing here. Just go and check everything on your chart. Go and check everything on your chart to be able to understand it better. So I'll meet you guys in the next meeting, in the next class, sorry, in the next video. So expect my video. This shouldn't last more than, let me just say one more thing, sorry, please. Okay, let me take it to a 15 minutes time frame so that I can be able to explain it better. So by demand and your supply zones are your area where you are planning to enter your trade. They should be your POI. They are your POI. POI means point of interest. So those should be where you are interested to take your trade from. So you be patiently waiting for the market to come back. This is my rule. Plan the trade, then trade the plan. Plan the trade, then trade the plan. Make sure that your trade is well planned, so that then don't just trade because you feel like trading. Trade because you have seen your setup. Okay, let's just stop here. The network has told us to stop. All right.